Let's set the parameters for this fiscal year, Luya, given the earnings, best and worst case scenario for Cathay. Lay it out briefly for us, please.
So in terms of best case scenario, it's actually what we would have considered a base case scenario last year, which is we're looking at something of a more remarkable recovery in the second half of this year. Unfortunately, that has become best case because looking at the coronavirus, the pandemic, everything in the first half, and now with the quarantine of the air crew, we think, honestly, the situation has essentially worsened from what we thought. And now the base case is hopefully that first and second half, we can maintain roughly what we've seen with like a little bit of an uptick. And obviously, worst case is we are essentially getting the exact same year as we saw last year with even more hiccups. So that's the picture right now for us.
Okay, and as far as the share price is concerned, the stock is up, what, 20% roughly since the low. I think it was back in January. Daiwa says because of that pop, they're now actually recommending, they're downgrading the stock here. You still have a buy recommendation. Why do you think differently?
So we think for the share price, really, if we're looking at 2020 results, that's already been priced in. We already know that for airlines, that's essentially a write-off year. What we're really looking at is for the midterm and long term. And we think Cathay Pacific, given their still very robust liquidity, given the fact that they are the biggest airline in Hong Kong right now, they are in a very good position to survive and to recover once the market gives them that environment to recover. And we do think that once the market does recover, they have a lot more space and they have a lot more room for growth than they've ever had because we're looking at a much less competitive landscape and we're looking at, in terms of global expansion opportunities, they will have more than before. So all of that put together, they are in a good position. Right now in the short term, though, I think all eyes are still on survival and still on whether or not they can make it through the next couple of months relatively steady. So that's really what the major concern is.
And Luya, that survival posture, will that involve further cost cutting at the airline?
So we do think that cost cutting will unfortunately be a big part of it. We're not sure yet if it means more staff cuts or in other types of smaller cost cuts. But ever since the restructuring, basically Cathay has done everything they can to cut all of the major costs. So unfortunately, we also don't see where there's much room for more cost cuts. But we do know that looking at the situation right now, looking at their monthly cash burn, they will be looking at more cost cuts. But right now, we just don't really know exactly where it will be.
If we throw it forward then and we take your optimistic, bullish view on the airline and how it is positioned competitively, we know, of course, many of its competitors have been squeezed or pushed out. What are the opportunities for Cathay? How could they take advantage of that? And which markets might they target?
So Cathay has always had a very, very hard time basically breaking the competition in the short haul region markets, like in Southeast Asia, like in North Asia, because as we've seen in recent years, there's just been so many breakout airlines in that space. So we really think that this is potentially their biggest opportunity post-pandemic, which is they can really take advantage of expansion in the short haul market. And we do see that intention ever since they acquired Hong Kong Express. That's a low-cost short-haul carrier, and we think that utilizing that carrier, obviously in that post-pandemic environment, they could really make some ground there. And it really depends on the environment, of course, but we think Cathay is honestly very well positioned compared to their Asian peers.
Okay, and speaking of acquisitions, I want to get your thoughts on this. And we've talked about this several times in the past here. The Air China owns about 30% of Cathay Pacific, and you don't think that an immediate sort of increase in that exposure from Air China makes sense at this point in time. Longer term, though, what do you think happens with that stake?
So right now, we don't think there is that immediate potential for a higher stake. We haven't seen much discussion about it. We haven't seen that intention from either airline. I think longer term, it's really hard to say because obviously Hong Kong is still a major market. And then with the whole Greater Bay Area scheme, we do think that there is that potential for Air China to take a bigger stake, to expand their presence in the Greater Bay Area, to expand their presence in the regional markets. So that's an opportunity. But right now, I think if you talk to either Air China or Cathay Pacific, they'll say that their major concern is still to weather this pandemic storm. So short term, I don't think we'll get any answers. Long term, there is that potential, but we'll have to see.
Here on the mainland, domestic tourism continues to pick up. Which of the airlines here are best positioned, and are they going to be on the hunt for any acquisitions or investments, do you think?
So for the mainland airlines, we still prefer the three big airlines, Air China, China Southern, China Eastern. We think they're very well positioned in terms of their cash positions, in terms of their general financial health. They're still very strong, being the mainland airlines, being the largest airlines. We actually do see a lot of potential, just like for Cathay Pacific, for them to expand into the global markets immediately post-pandemic. And we actually think that they are even stronger than the Cathay Pacific because they've had this domestic market shielding them. They have had that very early recovery that the other airlines haven't. So that's something to keep an eye on. But like all of these airlines right now, their main focus is on surviving last year and this year. But we might actually be able to see some ingrounds made by the mainland airlines, possibly later this year or even next year, as they sort of see international travel recovering, and they might have some thoughts of basically just grabbing a lot of market share while they still can.
A lot of people are probably wondering when they see, again, a flood of Chinese tourists, which obviously bolsters a lot of tourism-related sectors globally. What is your assumption, this concept of pent-up demand if and when borders then open up? What do you think is going to happen in terms of the volume of Chinese passengers traveling abroad? What's your assumption or estimate there?
So we do think there is a lot of pent-up demand. I mean, I think personally, all of us, we can feel that kind of pent-up demand right now. So just looking at the numbers, looking at the surveys, we know that travelers, passengers, people who have been traveling before the pandemic for leisure or for work, they are really itching to get back out there. I think right now the biggest issue is when we can actually travel safely and when we can travel without all of these hindrances that we've seen for the either quarantine restrictions or other restrictions. So I think once we see the restrictions start to loosen, either we see travel bubbles or vaccine passports or other kinds of schemes that let people travel once they're vaccinated or close to being vaccinated, I think we will see a massive boost in travel demand. And I think the airlines will really enjoy that in terms of revenue as well.